Origin Energy decides to close down the country's largest coal-fired power plant, but will the lights stay on? The employment market continues to impress, and a string of big earnings results from Telstra, Wesfarmers and more. It's Friday, the 18th of February 2022. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Day 5 in Orange in central West New South Wales. Sean, what's on the agenda for today, after Fear and Greed, of course?
Well, Fear and Greed, obviously, but then I think I'm going out for lunch at one of the wineries. Looking forward to it.
Oh, lovely.
Hopefully I'll be okay for the afternoon report, though.
This could be the afternoon report to listen to. If you only listen to one, make it today's. And also stay listening for Sean's chat to Sankar Narayan, the CEO of hotel booking software group SiteMinder, reported their half-year results this week. And it's a company that's really become an Aussie success story internationally. But first, Sean, we might all be paying much more for power after Origin Energy brought forward the closure of its only coal-fired power plant by 7 years to 2025. It's only 3 years away. There are now questions about the reliability of the national electricity grid.
Yes, there sure are. Origin will accelerate its efforts to reduce its carbon emissions, which obviously investors like, but it also increases concerns about energy supply and rising prices, particularly in New South Wales. The Eraring generator is the country's biggest coal-fired power generator and will close in just 3 years. Remember, AGL Energy's Liddell plant is due to close next year. Taking that much energy offline is going to cause problems because while there's much more affordable renewable energy going into the national electricity market, coal power still meets the bulk of demand. New South Wales Treasurer Matt Keane yesterday said the state would build the biggest battery in the Southern Hemisphere to help store renewable energy, but that will take quite a few years. Federal Energy Minister Angus Taylor criticised the move from Origin and said there was now a risk of much higher prices for households, small businesses and heavy industry. Origin boss Frank Calabria said the economics of coal-fired power stations didn't make as much sense as 40 years ago when Eraring was established. He made the comments after unveiling a rise in underlying earnings for the group. Now, AGL Energy last week brought forward the dates for its closure of 2 large coal-fired power plants as well, though they will continue operating for decades.
Sean, this is really the pointy end of the climate change debate because customers and politicians really won't like seeing blackouts and soaring prices.
It's going to be really interesting watching how consumers and businesses respond. Now, generally, they like green electricity, but when you get much higher power prices and potentially less reliable supply, that's where the rubber hits the road, and how people respond will be very interesting. We'll also put the spotlight on the federal government's intention to use gas, a fossil fuel, though not as dirty as coal, in the transition to a greener economy. While environmentalists and plenty of investors have criticised that policy, it certainly does buy time for the green transition to occur. Now, that could be a vote winner, but no politician will win from higher energy prices or power failures. It is a very big story.
Yeah, certainly is. And 3 years really does not seem that long.
Well, it just doesn't give much time to find alternates. That's the big issue. And it's about 20% of the New South Wales power supply will go offline in 3 years. That's big.
Yeah, extraordinary. All right, how did the local share market perform yesterday?
The S&P ASX 200, Michael, closed the day up about 0.2%. Now, it was stronger earlier in the day on the back of strong earnings results, which we'll talk about shortly, but then it fell back on unconfirmed reports about skirmishes around the Russian-Ukraine border. CSL continued its strong run of recent sessions, up more than 5%. BHP jumped 1%, while National Australia Bank, Westpac and ANZ outperformed. In terms of underperformers, the main one among the large caps was Fortescue Metals, which was down more than 3%.
Okay, how about global markets? How did they perform overnight?
Well, Michael, it wasn't a good night, with stocks falling in North America and Europe. Investors went looking for safe assets like bonds amid geopolitical concerns and the economic impacts of higher interest rates. Overnight, President Joe Biden warned that the probability of an invasion by Russia into Ukraine was very high. Technology stocks led the sell-off. In an early afternoon trading on Wall Street, the Nasdaq 100 was down nearly 2%. The S&P 500 was off 1.4%. Markets in England, Germany and France were all lower as well. The fears sent the price of gold to a 35-week high, closing in on $1,900 an ounce. Oil prices, somewhat surprisingly, fell, and the Aussie dollar is worth almost 72 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Plenty to talk about today, Sean. Nothing, it seems, is as precious to many mum and dad investors and also retirees, really relying on investment income, as the Telstra dividend. Even though the telco giant's first half profit slid, the dividend was maintained. Good news.
Yes, what a relief, Michael, what a relief. Telstra is the most widely held company in the country with around 1.1 million shareholders. And as you said, Michael, many of them rely on dividends for income. The interim dividend of 8 cents a share equates to a tax-free return of about 4%, which of course is much better than putting your money in the bank. Telstra's net profit fell by 1/3, but boss Andy Penn said that reflected a bunch of one-off events like the sale of some assets and the winding down of NBN receipts. Overall, the company is still on track to make underlying earnings of $7 billion this financial year. Now look, the numbers were solid. Revenue per user was up. It's growing its mobile business thanks to its 5G network. It's doing much better in the important small business category of customers, and it has about 4 million people signed up to the rewards program. But investors weren't impressed with the profit drop, nor were they that fussed on the outlook, and Telstra's share price fell 4%.
Revenue per user, is that the main measure for telcos, is it?
Yeah, it absolutely is. The NBN, the major telcos, Optus, Telstra, etc., they all want to get that number up because that really goes straight to the bottom line.
Okay. All right, big day as well yesterday, Sean, for economists. The latest unemployment figures released yesterday show that the labour market continues to do well.
Yes, the official unemployment rate was unchanged at 4.2% for January, and employment rose by nearly 13,000 with a loss of full-time roles more than offset by more part-time jobs. That's a pretty good effort given the surge in Omicron cases during the month and much better than expected. Now remember, this follows 2 very strong months and the annual employment growth is sitting at 2.8%. The big change in January was total hours worked, which tumbled 8.8%. That's massive, all because of COVID, but that's expected to bounce back this month. The participation rate ticked up a notch and at 66.2% is close to record highs. The labour market, which is critical to interest rates, certainly looks good. Online recruiter Seek yesterday said more job ads were posted in January than any other month in the company's 25-year history. The number of ads were up 40% on 12 months ago and 33% higher than January 2019, which of course was the January before the pandemic set in. Really, really strong labour market at the moment, Michael.
Yeah, certainly is. Now, Wesfarmers, Sean, which owns retailers including Bunnings, Target and Officeworks, as well as a chemicals and fertiliser business, disappointed investors.
It did. It unveiled a 13% drop in December half net profit, reflecting mostly supply chain disruptions and rising costs. The group made $1.2 billion for the half and cut its dividend, triggering a massive 7% plunge in its share price. The highlights include Bunnings, which just keeps growing. Customers love the hardware store. I love the hardware. In fact, Michael, have you ever been to Bunnings and not bought more than you went in to buy?
Sean, I think every time I've ever gone to Bunnings, for some reason, I've walked out with an extra can of WD-40. I don't know why. It just seems to be my default setting whenever I go to Bunnings, just pick up an extra can of WD-40. Suffice to say, we have a very squeak-free household.
Yes. I mean, you go to buy plants and you end up with WD-40.
Yep.
It's just one of those stores.
It really is. And a sausage sizzle.
Of course, we digress here. Bunnings did well for Wesfarmers, but Kmart and Officeworks didn't, with lower earnings thanks to lockdowns in New South Wales, Victoria and the ACT. Now, within the Kmart group, which includes Target, the Target stores are performing much better than the Kmart stores. Wesfarmers boss Rod Scott said trading conditions in recent weeks had improved. Now, the chemicals, energy and fertilisers business did very well, with revenue up nearly 30%. Looking forward, Mr. Scott said there were still plenty of price pressures in the economy. That's what the investors didn't like, hence the sell-off. The group is hoping to complete its acquisition of Australian pharmaceutical industries in the next couple of months, and that will be the basis of a new health division for Wesfarmers.
Now, there were some big changes in COVID restrictions yesterday, Sean, across 2 states that were announced in both Victoria and New South Wales.
Yes, very exciting for anyone living in those states. In Victoria, density limits in hospitality and entertainment venues will be scrapped from 5 p.m. today, and QR check-ins are also being dropped for workplaces and retail outlets. Premier Daniel Andrews said next week he'd make more comments about people being able to return to the office and dropping masks in indoor settings. The state recorded 9,400 COVID cases yesterday and 9 deaths. New South Wales has abolished the 2 square metre density rule, and QR codes will only be required for nightclubs and music festivals. Singing and dancing will be allowed. You'll be relieved on that one, Michael. Also, face masks will only be required in certain settings, such as hospitals, on public transport and on planes. Now, that state recorded just shy of 10,000 new infections and 14 deaths yesterday. Queensland recorded 5,700 cases and a record 39 deaths yesterday, though some of those occurred as far back as mid-January. Tasmania recorded 680 new cases. The ACT recorded 537 and 1 death. And South Australia recorded 1,400 new cases and 2 deaths. Finally, Western Australia reported 177 new cases, a record for that state. And also, Michael, the Moderna vaccine, which is now called Spikevax, has been approved for children aged 6 and older.
Oh, we've talked about this before, Sean. Spikevax is the worst possible name for a vaccination, and now approving it for kids. Can you imagine a 6 or 7 or 8-year-old kid being happy to go and get something called Spikevax? It even sounds painful, though I certainly do encourage kids to get it.
Absolutely, but it is a shocking name.
I'm glad you agree. All right, now, Sean, you've gone through a few earnings results as well. There are so many more at the moment. If I was to give you 60 seconds, could you give me maybe the top 4 or 5 standouts that you haven't already mentioned?
I'll have a go. Toll road group Transurban, that was a big one. It said the lockdowns in Sydney and Melbourne hurt its bottom line for the 6 months to December. The good news is that traffic levels have recovered as restrictions were lifted and its share price rose 1%. Good news for Transurban, maybe not for us commuters. Gaming group Crown Resorts, whose board earlier this week recommended a bid from PE giant Blackstone, lost nearly $200 million for the 6 months to December. Lockdowns in Sydney and Melbourne hammered the bottom line. Its main competitor, the Star Entertainment Group, recorded a $74 million loss. Same problem there. Staying in the sector, Tabcorp announced a drop in earnings and dividend. While its lotteries and Keno business is doing well, its wagering and media arm were hit by retail lockdowns in New South Wales and Victoria. But its share price jumped to a 4-year high yesterday, up nearly 4% on the strong lotteries and Keno business. And the country's leading property group Goodman upgraded its full-year earnings outlook after announcing a $2 billion net profit. It focuses on industrial real estate, of course, which has been in high demand as online shopping has boomed. Was that okay? 60 seconds or so?
You did it well inside 60 seconds, and luckily for you, because if you'd hit the 60-second mark, I was just going to turn off your microphone. And
right.
would have just been silence. But you do have a bit of a time extension because I need to ask you about oil and gas and mining companies, because there was a few of them that announced some pretty mixed results, really.
Yes, let's start with Newcrest, which wasn't so good. The gold digger, Newcrest Mining's profit nearly halved and costs jumped. It was a tough 6 months for the company. The volume of gold and copper sold dropped. The price paid for gold fell. Freight costs rose and the Aussie dollar appreciated against the US dollar. Everything seemed to go wrong. Now, oil and gas giant Woodside, by contrast, doubled its full-year net profit to $2.8 billion, triggering a 4% rise in its share price. That, of course, is on the back of much higher prices. Its realised price of a barrel of oil was $60 US, and the unit cost of production was $5 US. It just shows how healthy profit margins are at the moment in the oil and gas business. A couple more quick ones. Whitehaven Gold benefited from much higher coal prices to post a 350% rise in profit. And miner South 32 said it would return more than $400 million to shareholders after it announced a $1 billion net profit. Not bad.
Okay, Sean, what's making headlines in today's news media?
The main story around today comes from Bloomberg. It's reporting that Macquarie Group is considering the purchase of a controlling stake in National Grid PLC's gas transmission business in the United Kingdom. That would value the asset at more than $10 billion US.
All right, running through some of the other stories around today, Prime Minister Scott Morrison had a phone call with his UK counterpart Boris Johnson yesterday morning where they canvassed defence and security issues as well as collaboration when it comes to technology. Mr Johnson, following the call, said the two countries were forging an historic alliance fit for the next century.
Former ASIO Director General Dennis Richardson has bought into the politicisation of Australia's relationship with China, calling it dangerous. He said attempts to create a division between the coalition and Labor when it doesn't exist risks damaging national security and only serves China. Now remember, this week both the Prime Minister and Defence Minister Peter Dutton have claimed Beijing wants Anthony Albanese to win the next election. Traditionally, both sides of politics hold pretty common positions on national security, and it doesn't tend to become an election issue. later in the day, Defence Secretary Greg Moriarty added his weight to the discussion. He endorsed the need for bipartisanship on national security. I think this is a dreadful instance where both sides of politics need to do a much, much better job in terms of bipartisanship.
Yeah, I agree with you on that one. Now, financial watchdog Austrac will investigate 3 Bell Financial Group entities to determine if they complied with anti-money laundering and counter-terrorism financing laws. Austrac said it had identified some compliance concerns.
And Michael, it was a final sitting day of Parliament yesterday. During question time, Labor attacked the Morrison government's record on aged care and accused the Prime Minister of running a desperate, untrue scare campaign. Mr Morrison painted the government as strong on the economy and defence, and that's exactly what we're going to hear from now until the next election.
Yeah, about another 2.5 months of it, I reckon. What's the key overseas news this morning, Sean?
Tension on the Russian-Ukraine border has markets very nervous. There were unconfirmed social media reports yesterday that Ukrainian forces had shelled Russian troops, which immediately led to a sell-off in riskier assets. Meanwhile, the White House called the Kremlin's claims that it's withdrawing forces from the Ukrainian border as false. In fact, the US says 7,000 more troops arrived in recent days. That takes the number to about 150,000. The US Federal Reserve minutes show that the world's most important central bank will start raising interest rates soon and is watching inflation very closely in case it might have to tighten faster than expected. Market watchers now expect the Fed to hike the cash rate from 0.75% to close to 2.25% by the end of this year. And finally, Hong Kong is planning to COVID test the entire city, a strategy that's been used in parts of mainland China in an effort to get control of the latest coronavirus outbreak. According to Bloomberg, the city has 7.5 million residents, and part of the problem with mass testing is where positive cases would be housed and quarantined once it's done.
What a massive logistical challenge that would be, testing 7.5 million people.
Yeah, incredible.
All right, up next, Sean, is the Fear and Greed Daily interview, and today you're speaking to Sanka Narayan, who's the CEO of hotel booking software group SiteMinder.
Yes, as you mentioned at the top of the show, SiteMinder has done really well. It's an ASX-listed company that provides the software for bookings for many, many online operators. And so if you've used one of those operators to book a hotel, you may well have used SiteMinder's software. It's not just a chat about SiteMinder, it's also about what's going on in that sector.
Yeah, it's an interesting one. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 18th of February, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.